Hey, what's up, traders? Today is June 1st of 2020. We're going to be checking out the watch list provided by Ascend Trading. Let's take a look at the SPY, the Spider ETF. We see that the daily time frame does have some room to run. Notice how there's a range between these two prices, between this 314 and this 320. You can see how there's this incline V shape right here that the market pivoted. So it looks like it's going to have some more room to go before it pivots. Now, if you're looking to short the market right now, it's not a good idea because it's just not high enough or at that expensive price for it to pivot. Most people that are pretty much trading this are pretty much day trading, because obviously if you are just looking to swing trade it, if you were practically swing trading some options not that far out, you were pretty much getting hit with the decay. So we're going to be looking at this 1 hour frame just to give us a better resolution. This is pretty much that little pivoted shape. Notice that V shape right now at this near 314 price. So it looks like we want for it to move a little more, so that way we can get puts at a cheaper price. And then we're going to look at the 15-minute frame. So the 15-minute frame knows how, even though although it's going up, it's been very choppy on the move up, not a lot of oomph or strong momentum versus what we would usually normally see on on a trending day like this one right here, or like this right here. Because if it doesn't have that momentum, although it's going up, people are going to continually get hit with the option decay. On this 15-minute frame, looking what we can do on Monday. What I want to see on Monday as a day trader is see the market pull back, so that way on Tuesday we could probably get a better dip by. The price that I'm looking for on Tuesday is this 296. So obviously for it to hit this 296, the market will have to sell off. Right now, from where it is, if you were to trade the open, this is a very difficult open, only because it's pretty much stuck in a range. So notice how this range between this 300 and this 307 right now. So if you were to buy the open, it could sell off or it could run up. Now, if you're looking to buy in just a quick trade, what you're probably going to be wondering is if the market's going to rip up. If the market's going to rip up, then you can probably likely get a really quick trade at this 306.80 area or 307. That way, anybody that was trapped, I believe this should be Thursday, anybody that were long on Thursday will have a chance to get out. So you can profit while they're selling off by taking a short or buying puts for a quick trade. And if it pulls back, pretty strongly, you can probably hold some more of. You don't have to close all your puts, but you can hold some in hopes that it can come all the way right down. But it's kind of risky because it's on an uptrend. Usually you want to sell the rally when it's on a downtrend. But although you can get a quick trade for this move right here, it's pretty much going to be an easy quick trade. So here's the Qs. So Qs doing a lot better performance than the SPY, because obviously the tech sector's been recovering a lot faster than the overall market. Now the QQQ almost at this all-time high. So far, it just needs a few more bucks, so $4 more. Notice how it closed at 233.36 and all-time highs at 237.47. So if it can just rip a little higher, a few more bucks, then then people are probably going to end up closing their long near the daily. If you look at this daily chart, there's a few highs right here. There's this daily opening price, and then there's that sell-off, and then the market closed right at that same high. Now we pull up on this 15-minute chart. So if you see how the QQQ ripped up on Friday, it looks like it's a cup and handle. You can see the cup right here and the handle right here. So with the QQQ, if it can trade above this 234, then it's likely it's going to continue going up. So if it's going to end up tech ends up continue going up, then it's likely that it could push up the SPY as well. Because remember how they usually go together, unless it's financials. Because financials, their movement doesn't affect the QQQ whatsoever. But Since tech is a huge part of the SPY, then of course if the Q runs up, there's a good chance the SPY could run up as well. So therefore, that if the QQQ rally, then we could see the SPY rally as well. In terms of dip buys, the only dip buy I could see on the QQQ is for it to rip up, and then as it rips up, it can just retest this 233.60. So what I'm saying is that this 233.60, right, we get this little cup and handle break, right, and if you don't feel comfortable buying the breakout and you just want the dip buy, you can wait for it to come down to 233.60 on the dip buy for a long position. Here's BABA. So BABA, not too particularly interested on just the trading range. I'm just particularly interested on this gap fill right here. Notice how there's a V shape right here at this 209.64 and this gap fill near this 212. Likely there's going to be some profit targeting right here. So if the morning rips up, you can definitely buy some puts or take a short right here for a quick profit. And then Google has a gap fill at this price of $14.83. Needs $50 more to go. So it's going to be a little while before it gets there, but you can probably take a quick scalp at this $14.40. Right, notice how the price opened, and then there's a huge sell-off right here on the daily, and it's not too far from retesting it. So $7 more, you can probably get a quick trade. And then there's Tesla. So Tesla on the 1 hour chart. So Tesla, it's been moving up, right? Likely that if it breaks above this 840, then we could see it rallying to 870 right there. So this is just the flow algo. We just wanted to see what possible tickers got a lot of unusual option volume, and the ones I'm very particularly interested is Uber right here and Zanga. Notice how there's 23 option orders and then 15 option orders on Uber. So if we take a look on Uber, this is just the option sweeps, right, and then the blocks. So you can just take a look at this. Now we take a look at Uber. Notice how Uber on the daily, you get this little V shape right here, and then technically it should have been a support level, but it broke down, and now it's coming back up and then retesting is 36. So 36 was pretty much a level that people were watching for. Notice how 36 right here, we got the sell-off, opened at 36 and sold off, and now you got this bullish engulfing. So it looks like Uber's gonna be very lit above 36. So we take a look at Uber. We can see on the 15-minute chart, multi-day, the past almost 10 trading days, 36 definitely was the wall, and now since it closed above 36 in power hour, it looks like that we're likely going to see a continuation. Because so if for some reason Uber gaps up and there's a morning sell-off, people are going to be looking at 36 to buy the dip. And then we have Zanga right here. So Zanga also has a lot of call option as well. So if you see Zanga, you can take a look at it. And then Zanga, here's the weekly chart. Zanga's been ripping up. We can see how, for pretty much for most of this year of last year, it's been very choppy, and then this weekly candle is pretty big, over $1. Looks like Zanga's going to get a lot of action. And you can see the flow of the option volume. Basically, people are looking to see if it's going to continue going up, so they're taking a bet for it. Here's a 15-minute chart, looking like that. So what happened if Zanga pulls back? There's some reference level for the previous day for a continuation. And that's it for the watch provided by Ascend Trading. Hope you guys have a good trading day. It's going to be Monday, the first day of the week, and we hope to see you guys on the trading floor.